All right. Good afternoon, everyone. I hope you guys are doing well. Hope you guys had a great, fantastic Thanksgiving holiday and quite a muted week around the markets did end up green on the week, but not by much. And so we'll take a look at the charts. And I'm putting out this message, putting on my reputation here. And if you're a bull, you probably don't want to watch this video, but I'm kind of bearish going into the next 2 weeks, at least for the next 2 weeks. Going into next week. I'm sorry, going into the next 2 weeks because I'm just looking at the charts. It just doesn't look good to me. Especially, we do have a major catalyst event coming up on December 13th, 14th. That is the CPI data for November, and also the FOMC rate decision, which I do think, for the most part, they'll do another 50 to 75 BPS basis points. However, it really depends on what that information looks like come on December 13th. But at least for the next 1 to 2 weeks, I do think we potentially can be headed back in a downturn. Okay, looking for that data. So with that being said, I do think the Bears are coming. All right. The first thing I'm going to take a look at is, of course, actually, I'm going to switch over to a different chart here and just kind of give you this chart that I've been tracking over the last couple of weeks here. So if you remember this S&P 500 chart, this is a channel based upon the timing of March 2020. And this is your classic textbook case study, right, of support and resistance and the reversals and the roles that it plays. So back in June 2020, you had support here back in November 2020, and this support actually broke through at the height of the market, which was around January of 2022. We retested that channel or that resistance, or support becomes resistance, right? So that resistance failed terribly, and we came all the way back down here. We had 1, 2, 3, and counter trend rallies, and this could potentially be the fourth one. Now, we did break support finally here in September 12th, and we're trying to rally back up. And look at where we are as of today, as of the closing this week on the S&P 500, just not able to break that resistance. Okay, if you watch the action today on SPY and the SPX cannot get out of the 40-30 mark. Okay, the SPY just could not get out of the 403 mark, and it just kept getting rejected over and over again. And if you've been trading long, you know that if the prices continue to bang its head against the wall, eventually it's going to give up and the sellers are going to step in, right? Okay, and look how low we are on VIX, and I'll talk about the VIX in a second here, but let's go ahead and switch over to my regular charts here, and we'll start with the SPY. All right. You look at the SPY, the daily candlestick here, getting rejected. I mean, the Bears are just fighting a really good fight at this level. They do not want to see this gap fill, right? You have a gap fill from 403 up to about 408, and your moving average 200 on the daily is right here at the 404 mark, all right? And it's a downward sloping 200 day. Last week it was at 405, so now that's coming down. As long as we keep moving sideways, that 200-day line is going to go further down. So the Bears are just heavily defending this area at the 403 mark and just cannot break through. Okay, I know I said a lot, but so with that being said, you look at this rally, okay? You look at this rally that we've had, since October 13th. That was a new market low. You look at this rally back in June to August, right? This was a pretty extended rally over 2 months of an upward trend here, okay? But notice something that, and this is why I keep saying that the Bears are coming, is that the volume keeps getting lower and lower. Every time it makes a move up, the volume is making lows, okay? And you look at this rally here from October 13th, we're moving up in this little rising wedge, okay? But in addition to that, look at the volume keeps dwindling down. What's up with that? All right. We've seen this before. All right. We've seen this song and dance before. We saw it for the entire 2022. Here's a rally. Here's a rally, right? Here's another counter trend rally. We've done this so many times, at least 1 time, 2 times, if you want to count this little rally here. But this is your third major counter trend. Okay. And we keep making lower lows. So what's going to make this particular rally different? Well, of course, what's different is that the cooling inflation, okay? And we could see a lower inflation print come December 13th, And I'm open to that. Okay. I'm open to a bull market coming back. Trust me, fellas. I do. I want a bull market too. Because obviously in a nice uptrend there, you could trade the trend, right? But as long as we stay around this area, things are just going to chop around, right? Okay, so with that being said, I'm going to put a mark here. I'm going to put a target for going into next week. Let me erase all these ridiculous lines. All right, I'm going to put a target here of 395 next week. I do think that we're going to bang our heads right at that 403 level on the SPY, and the sellers are going to step in because it actually correlates pretty perfectly with the S&P 500 200-day average as well. So once this actually starts pulling back, I do expect that we're going to retest support at 395 next week. Okay, and here you do have some demand, right? There's some there's some volume demand here at the 395 or 392 mark for the SPYs. Look at this volume today. Ugh, pretty bad. All right, let's go over the weekly chart. You see what I'm saying? All right. You look at this weekly chart and it's just another trend potentially. Okay. I'm open to being wrong as well. All right. You have a pretty kind of engulfing candle. It's just kind of inside the same range as last week. All right. You do have a nice candle, but if the SPY is only up like, 6 points on the week, it's not a lot to say. All right. So I'm looking next week to see a potential pullback here. This is your typical bear flag structure as well. Let's go ahead and go to the Qs. I'll talk about the VIX and a few things here. If you look at the Q weekly, Q actually looks somewhat relatively weaker than the SPYs. My bull thesis this week was that if we can close above the SMA 20, and I'm not saying we can't either next week, but if we can't close above the SMA 20, which is that 292 mark, which was my weekly goal today or for this week, we're moving on low volumes. Okay. It's green week, yes, but on low volumes. And yes, I understand we're short a day on the week. Okay. We only traded 3.5 days this week. But this, again, is your typical bear flag structure on the weekly chart. All right. If I go over to the daily here, you have the bearish Harami candlestick, which is not good. All right. No volume. All right. The volume there's just no buyers. There's no buyers. Where's the buyers? All right. I'm sorry, being a little exaggerating here. But you do have a big old gap here. Now, my thing is, if we come in like 7.3% CPI, good. Finally, let's just go ahead and fill this gap. But I get this sneaking suspicion that we're going to fill the gap on the downside first. Okay. I'm going to put a weekly target of 280 mark. That's been a psychological support for quite a while now, since November 11th. You see, we broke through 280, came back down, retest 280, rejected up here, came back down to retest 280. All right. How many times are we going to do this, right? You get that feeling that we're going to start moving back down. If we break 280, I think you'll see the retest of SMA 20 on the 20 day. Now, that's not necessarily a trend breaking drop necessarily, but things need to calm down. Why? Because you look at your stochastics, right? Look at your stochastics and your oscillators. They are burning hot on the Qs and the SPYs, okay, and the S&P 500. While I'll talk about the VIX in a second, while the VIX are oversold, okay? And you have other nice candles on the VIX, so we'll talk about that. But like I said, your CCI is hot, stochastic is hot, CCI hot. I'm going to put a downward target of 280. If we break that, I think we will retest the SMA 20 on the Qs. All right. So let's go to the VIX. Okay. So it's a good time to talk about VIX. All right. And I'll go over the weekly chart, and you can see this pattern that's been setting up quite nicely. All right. Since 2018, we chop around in this wedge, break out. We chop around this edge, break out. Higher lows, lower highs. Guess what, folks? It's the VIX is cycling through again. How many times have we seen this year? Every time it comes down here towards this trend line, the market dumps, okay? And this VIX rips up, okay? So the potential target, if we do rip up, 34, okay? So yes, I do have VIX calls, all right? But if you look at the weekly chart, okay, cycling down on the stochastics, all right, or CCI. But look what's happening on the daily chart for the VIX. You see this hammer here. That is your typical inverted hammer, which is a pause on a downward trend, right? And you look at the K and I line, this is starting to curl, and so is the CCI. Okay, so if those two oscillators starts moving, okay, you're going to see that selling pressure on the equities, on your SPY, your Qs, and especially your S&P 500. All right. One thing I'll say is Apple. So let's talk about Apple real quick. All right, lower lows. Okay, it's making a stance at 134 for sure. I totally get that. I think it's going to come back down here to retest. Okay, you have a small gap to fill down here at the 138, 139 level. You have a daily doji on the mark so far. Basically, the SMA 20 has held on the daily chart so far for Apple. All right, so I still think that Apple is going to come back down. It's going to reset. Look at your Apple stochastics. Okay, pretty darn high. Yes, can it stay high for a while like it did back in June to August? Certainly, I'm open to that. I typically, if you're part of TRT, we just follow the price action. I give a market update at the end of the week to forecast what's going to happen the following week, but nothing trumps, right? What I say, nothing trumps against what's happening in front of us on the 5-minute, 15, 30-minute charts. Okay. Things can reverse. All right. But as far as the market goes, I do think we're going to pull back next week because these stochastics are running way too hot here. Okay. One more chart here and I'm done. Tesla. All right. Tesla, I'm still on the bear side. I know, right? Yes, we bounced off the moving average 200. We've seen that plenty of times before. All right. 162 was my target this week, and we actually hit 165. All right. You got a green little hammer on the weekly chart. Now, if it breaks through the 186, and we saw, and remember, this is support, right? With support, and it actually broke support last week and this week. So this becomes resistance. So I still do think that Tesla is going to come back down, and I think I will be a buyer around the 144 mark. All right down here, which correlates, there's a big old gap, or not a big old gap. There's a small gap that needs to fill down here, and I wouldn't be surprised to see that coming. And I'm not saying it's gonna be next week, etc. It could be a few weeks away. All right, it really just depends on in the next several weeks what kind of news we're going to get, and also the CPI data, and also the FOMC rate decision, which is predicted to be 50 basis points at this time. All right. But I think that the market still need to cool off in preparation or ready for that big event. Okay. Now, like I said, this structure here looks a lot like what's been happening here. Now, the big question is, how much longer does this have to go, right? If you look at the percentage points from June lows up until the August highs, it was roughly we had a 24% increase in Qs over 2 months. All right. If we were to do that kind of basic math, well, 24% would actually take us way up here. Let's see, right about the 315 mark. Okay. But guess what? I don't see that happening, right? And for the reason is because all these counter trend rallies have been nearly rejected at the moving average 200. Okay. So Q for sure has a little bit ways to go here, but you see here and you see here, we typically get rejected around that area. Now, the SPY, like I said earlier, the SPY is pretty darn close. Right, pretty darn close to your moving average 200 day, and that's going to be a big area to watch. So once again, my downside target is 395 for SPYs. Okay, and for the Q, it's going to be 280. I do think also that S&P 500 is going to pull back under 4,000 once more. All right, so with that being said, you've been warned.